Now, Executive Suite with WPRI.com reporter Ted Nesi.
It's a time of big changes at Citizens Bank. Rhode Island's largest financial firm is on the road to independence from its British parent company, Royal Bank of Scotland, following a $3 billion Wall Street IPO in September. Now, as it goes out on its own, Citizens is facing pressure from investors to cut costs and boost profits. So what does it all mean for the bank's home base of Rhode Island? This week on Executive Suite, we put those questions to the man in charge, the chairman and CEO of Citizens Financial Group, Bruce Van Saun. Welcome to Executive Suite. I'm Ted Nesi. Always glad to have you here, especially on this Thanksgiving weekend, and very glad this week to be joined, as you heard there, by Bruce Van Saun. Bruce, thanks so much for coming in.
My pleasure. Thanks for having me.
You've been on a bit of a world tour of the geography of the Citizens. I know you've been to Albany, Pittsburgh, everywhere lately.
Right. We took advantage after the IPO of doing what we call a series of market visits. So we've been through all the major cities in our footprint. We've met with our colleagues, we've met with customers, we've met with our community partners. I think there's a lot of momentum in the company and a really good feeling.
And we're going to talk a lot about that. But I want to ask first, just personally for you, you'd been at RBS in London at the headquarters there for a few years, and then you were brought back to run Citizens just over a year now. What's it been like being the CEO, taking over this bank with a pretty storied history around here?
It's been terrific, really. I think my predecessor left me a good team. We had some work to do on our strategy to decouple from RBS. I think we put a good plan in place, and we're executing very well against that plan.
So let's talk about that for that IPO in September, initial public offering. So people at home, give them backstory. Royal Bank of Scotland bought Citizens, and I believe in 1988.
Yeah.
Right? Big global bank, ran into some trouble, obviously, in the financial crisis. So right now they're spinning off Citizens, but you're sort of in an in-between phase now, right? You had the $3 billion IPO. So when will Citizens be fully independent from RBS?
Well, there's an agreement with the European Commission that RBS sell their position down fully by the end of 2016. And that's because of the taxpayer bailout. There's certain rules around the penalties for that, and selling some operations and shrinking was part of the program.
Something you learned all too much about in London.
I was over there. And so the first step was $3.5 billion. RBS sold 29%. And then through a series of transactions, likely a couple in 2015 and one more in 2016, they'll sell the position down to zero. And
at that point, Citizens will be back to being a fully independent bank on its own?
Fully independent, although what I would say is that we've had a great commercial relationship with RBS, and so we use their global network to help our clients in their kind of global business activities, and so we want to continue that. And similarly, they use us for the U.S. needs of some of their clients in Europe. And so they'll continue that. So we would expect that to continue.
How much independence do you have as CEO? Are you still taking calls frequently from the CEO of RBS over in London about, well, we think you should do this in Pittsburgh or something like that, or is it really?
They've carved out certain rights to approve our budget and approve our plans, but I was on the board there for 4 years, and they know me quite well, so we developed a plan for the next 3 years, and they're pretty much letting me get on with it, and I'll check in, a couple times a month, but I think we have a pretty good autonomy to do what we think we need to do here in this market.
So obviously European financial pacts and things like that aren't as tangible to people at home here, but what would you say to folks, what's important about becoming independent for Citizens? What are the pros and cons of being spun off and being on your own again as a bank?
Well, I think we get to pursue our own agenda in the U.S. market, benchmarked against our U.S. peers. So when we were part of RBS, they had a broader agenda, and in the last 5 years after the crisis, it was really a de-risking agenda, and it was playing defense and strengthening the balance sheet, where the U.S. economy was stronger than the UK and European economies, and our peers started growing again. So what I find really refreshing now is we have a chance to decouple from that agenda and grow the bank again and invest in areas where we see good revenue potential.
You've talked about in interviews since you became CEO about constraints that were sort of placed on Citizens by being part of RBS and all that went along with that. One you talked about was risk constraints. I know some folks at home might get nervous hearing a bank talk about they weren't letting us take enough risk after the couple of years, but what do you mean by that? What sort of constraints on the risk you could take?
Well, ultimately, you don't make money without taking prudent risks, so you look for risk-adjusted returns. I think one of the examples, for example, RBS was over-indexed to and overexposed to commercial real estate globally, principally in the UK and Ireland. We weren't here in the US, but in order to get the commercial real estate exposure in line with their peer group, they said everybody has to run down commercial real estate lending. So right after the crisis, it was a great time to make commercial real estate loans again. Spreads were wider, terms and conditions for lenders were better, and we couldn't play. So now we've become very light in commercial real estate, which is an attractive asset class and a good part of the American economy. So there's still opportunities to play, and now we're increasing our exposure there, but again, prudently.
How focused are you and the board on keeping Citizens independent? You know, there have been so many discussions. It seemed like every few months there was TD Bank's going to buy Citizens, and it never happened, obviously, and you're going independent now. Are you just setting the bank up to be acquired, or is your plan this is going to be an independent bank on its own, a big regional leader?
I think we can be a top-performing regional bank. I think we have the scale to afford all the investments that are required to serve customers, all the regulation that's put on banks. So we don't need to be part of a bigger banking organization. Obviously, at the end of the day, we work for our shareholders, and if someone came along and offered a blow-away price, we'd have to consider that. But I think our plan is basically, let's get fully separated from RBS, let's execute our plan, and that should make us one of the top performing and most respected regional banks. There's no reason why that can't happen. And
can you give viewers a sense of how big is Citizens Financial Group in terms of assets, geography, employees? How big an institution are we talking about today?
It's about $130 billion of balance sheet footings. Looking at just the traditional banks in the U.S., we're probably number 12 or 13 in terms of size. The biggest one headquartered here in New England. So we have around 18,000 employees, and we operate our consumer operations in 11 states.
And I think Rhode Island, you have the biggest, not the largest number of deposits because it's a small state, but the biggest concentration in a market is Rhode Island for you, right?
Sure. We have number one market share. We have 5,300 people here. Many of our mid and back office functions and head office functions are located here in Rhode Island, so many employees call Rhode Island home. And we've got about $7 billion of credit extended throughout the state, either from a consumer standpoint or from a corporate standpoint.
I want to ask you, going back to the IPO, it valued Citizens at about $12 billion. That was at the lower end of some of the estimates. Were you disappointed by that? Why do you think the market decided to put that valuation on Citizens as it comes out independently?
Well, I think there's a few reasons that it came out a little on the light end of expectations. Partly it's that RBS is going to be back to sell more stock. So I think people shied away from that. That could put some price pressure on the stock if things aren't going particularly well. And then also, there's a lot to execute still. So we're relatively new in terms of this turnaround and improvement plan that we have. And so I think some investors want to see more proof points before they jump into the story kind of with both feet. But having said that, the stock traded up on day one by 7.5%. The stock has outperformed our peer group probably by 4.5% since we've been public. So we've had, I think there's people really interested in the story, interested in increasing their position, and it's up to us now to just execute our agenda and keep putting good numbers up.
All right, we're going to take a break. When we come back, we're going to talk much more about Bruce Van Saun's plan for Citizens Financial Group as it becomes independent for the first time since the 1980s. So stick with us on Executive Suite. Welcome back to Executive Suite. I'm Ted Nesi, and I'm joined this week by the chairman and CEO of what is now the largest independent bank in New England, Citizens Financial Group, Bruce Van Saun. Bruce, we were talking before the break, you were alluding to your plan, what you presented to investors to get them to buy into this new independent Citizens. And one of the criticisms I read, or one of the concerns I read from investors, was that Citizens, they felt, isn't as profitable as its peers. So, what is your plan to address that, and how do you see it rolling out?
Sure. Well, first off, we need to grow again. So we want to grow our balance sheet, and we've started to do that. We need to invest in businesses that aren't at scale. So we have been investing in commercial banking, and there's still more room to run on that. We want to be bigger in mortgage banking, business banking, have more wealth advisors in our branches. So we see a very good opportunity to generate more revenues from the operations that we have currently, and we can really leverage that. We need to do that prudently, so we want to make sure that we're looking for opportunities to run the bank more efficiently and pinch some expenses in some places so that we can make those investment in people to get closer to customers and bring more customers into the bank. And then there's some work to do on our capital structure, and so we have some things that we're going through to make the capital structure a little more like our peers. So it's really a combination of those things.
For people at home who aren't bankers, what does the capital structure mean? What is that talking about there?
Well, it might be a little complicated, but effectively we converted our capital structure to all equity at the time of the crisis. Because it was a form of assistance from RBS to Citizens, so they wouldn't have to pay interest on some of the capital instruments that were in the capital structure. And what we're doing over time is pushing the undo button on that. As our profitability improves, we're basically retiring some equity and putting some of those debt instruments back in place.
So it's going to be a good bit of work to untie yourselves from RBS and the
Yes.
things you had to do to help RBS.
Yes.
Yes, he says, we're thinking it through. When people hear about the need to be efficient, to be prudent, as you said, they naturally get worried about job cuts. I'm sure there's Citizens employees watching today and wondering, have you cut a significant number of jobs so far? And do you see a significant number of jobs cuts coming forward as you try to improve profitability and make investors happy?
Well, I think we've been very thoughtful in terms of how we go about that. And most of the lifting that we need to do in terms of where we're going to pinch down, we've already been able to affect. And net, our headcount really has only gone down by the sale of our Chicago region. So anything that we've been able to save in terms of efficiency, we've already reinvested right back in hiring people.
So you see, so that's the thing, even if there are jobs lost in some areas, you want to see, it sounds like a fairly significant amount of hiring in other areas to switch it over.
Right.
Where do you see the hiring coming? What sort of people will
Well,
you be
the
looking
things
for?
I mentioned in getting to scale, one of the big areas is in mortgage bankers. We want to add kind of over a 3-year period, 14, 15, 16, about 350 mortgage bankers. We probably want to hire 60 financial advisors, 60 business bankers, probably 50 commercial lenders. So you put that all together and you get up to a number close to 500.
What do you think morale is like inside? I know there was a lot of nervousness from talking to folks at Citizens when RBS was in trouble and when there was talk of acquisitions. Have you seen a change? You still get a sense of nerves in the hallways?
Just fresh back from my tour of our regions, I think people are feeling really good that we've set some important milestones. Getting the IPO done by the end of September, 1 year after my arrival, was a big one, and everybody pulled together and worked really hard to get that done. So I think that puts a spring in the step across the organization. I do think people are working extremely hard, so there's a bit of exhaustion, and I think over the holidays hopefully we can recharge a little bit and come back fresh again for another good year in 2015.
Could you see Citizens, you mentioned you divested the Chicago branches as you worked on the IPO plan. Could you see Citizens expanding its geographic base significantly? Is that part of your growth plan to go into new markets?
I think one day it could be, but right now I think one of the reasons Citizens and RBS stumbled a little bit is they focused too much on acquisitions and not running the bank really well. And
a big focus on Fred Goodwin and
taking advantage of the organic opportunities right in front of us. So what I really want to do in this 3-year period is just run the bank better and take full advantage of those organic opportunities. And then when we're running well, then we can look and say, okay, are there further opportunities for us that we can gradually expand our operations.
So it sounds like also in the short term, you wouldn't be focusing on any major acquisitions either.
Correct.
To get significantly
Correct.
larger.
Right.
How about investment banking? Is that something that's an area Citizens hasn't played in? Could you see yourself opening an investment banking?
No, I think we have certain activities that capital markets or global markets, cash management, treasury solutions, which sometimes you'd see in investment banks, but it's a more traditional sale to the CFO and the treasurer of a mid-corporate company, potentially the CEO when it's a middle market company. But I think that's the sweet spot for traditional banking, things that are extremely complicated. or involve really high ego people like investment banking, that's not where we want to be.
The Goldman stuff, we'll say then.
That's right.
How will people know, investors, your employees, yourself, how will you know when your plan is working? What are you going to look for to tell if it's on track? What are your eye on?
You know, we have targets across all of our 5 stakeholders. So we have customer targets, colleague targets, community targets, the share owner targets, and then targets for our regulatory performance as well. So it's a quite diverse agenda. I think the one that everybody really focuses on, that investors focus on, is return on tangible equity. So where's that number? Because that is really dictates where bank stocks trade.
It's a very common, folks. It's technical, but a very common way to look at banks.
It's a very tight regression line that if your ROE is higher, your stock multiple is going to be higher, and if it's lower, it's going to be lower. We started out the quarter that I arrived, we had a very low ROE. It was about 4.5%, and we've been able to up that by about 2% in a year. So it's moving back towards the pack, but we still have work to do.
All right, we're going to take another break. When we come back, we're going to ask Bruce Van Saun some more about Citizens' commitment to Rhode Island and whether they'll be staying here, which I think he's going to say yes. So stick with us on Executive Suite. Welcome back to Executive Suite. I'm Ted Nesi, and we're talking today with the chairman and CEO of Citizens Financial Group, based at One Citizens Plaza down in Providence. And we want to talk a little about Citizens' ties to Rhode Island. Bruce, you know, this place, state sometimes gets an inferiority complex, and maybe people have a reason. A lot of banks have left from being headquarters in Providence. So, you know, what's your view on Citizens being based in Rhode Island? Is that the plan going forward? Are you going to keep a major footprint here? Is that going to stay your headquarters downtown?
Yes, we're very satisfied with the long tenure that we've had here in Providence, and we expect that to continue. So, you know, nothing to report, no dark fears, nothing to worry about.
Nothing to worry about, Rhode Island. So you guys can calm down for a little. The question we had on the other show I do, Newsmakers, last week, Governor-elect Gina Raimondo, and one of the things she said is she wants to talk with the big executives in Rhode Island about what they need to get their next 100 jobs added here. This obviously off the news. CBS was adding an office in Boston. So if you were sitting down with the governor-elect, what sort of things would you tell her are important to citizens as you decide if you're building a new office, if you're adding a new division or something like that,
Sure.
whether Rhode Island or somewhere else?
Well, as a matter of fact, I have a call scheduled with her tomorrow, so she's already reached out to me. I think that the track that the state politicians has been on is very positive for Rhode Island. So looking to cut some of the corporate taxes, you know, looking for investing in certain areas, the kind of combination of the medical and educational strength that exists already in the greater Providence market, and leveraging that the way many other big metropolitan areas have done throughout the country. I think they're on the right track.
And what skills are you looking for in your workforce as you're hiring going forward? What sort of things are are your next set of employees going to have or need to have?
Well, obviously they need to be very technologically savvy. But we need, good thinkers too. So we need good financial trained people. We have good credit training programs for our people and other types of training programs. One of the things that we're finding as the regulators get much more rigorous in terms of how they want to see the bank run is that we need very good quantification skills, I guess is the way to say it. And so we've had to hire PhD types to do models and all the stress testing work that we do. And it's a challenge to find those folks, and we've kind of split that between Boston and Providence. But there's a great education system here, and I think we need to do a better job of linking up with some of those schools to pull some of those people and to fulfill our needs. I just had a conversation on that earlier today about we need to grow our own more and not keep competing for lateral hires and bidding up the cost of talent. Someone else. You just need to really focus on better campus recruiting.
A pipeline then to have them coming into you.
That's right.
You have, we were talking before, commercial lending, such a core part of what Citizens does. What are you hearing in terms of, talking to your folks in terms of the trajectory of the economy, especially the regional and the Rhode Island economy right now? Are they feeling more optimistic finishing 2014, going into 15? Is there signs of a pickup? Is it flat but okay? What are you seeing?
I think it's maybe cautious optimism. So I think we've been chastened from being too optimistic over the last 7 years. It always seems like it's right around the corner, and then it just seems to be a little less than people were hoping for. But it does feel right now that some of the statistics on unemployment, on other new company formations, on the housing market, seem to be pointing in the right direction. And so one of the things will be interesting is, when does the Fed finally kind of take the punch bowl away and start to go back to a more normalized interest rate environment, because I think that's been sustaining the recovery quite a bit.
And there's a lot of disagreement on that. We saw that quantitative easing ended, but the rates are staying very low.
Yes.
Is there a general projection inside Citizens you're banking on Janet Yellen decides in 16?
I think the best thing to do on that is to always follow the forward curve, because that's basically the market's view of what's going to happen. So we calibrate our planning around what the market is saying. And the market, I think, has said potentially the first Fed rate hike comes in the middle of 15. And when they feel kind of more risk averse, they say that could be later. And when they're feeling good, it's probably still that's the earliest that'll happen. So we've been waiting for over the last 7 years, the forward curve has predicted a rate rise kind of in 18 months' time.
Yeah, it's always 18 months.
It's always
away.
18 months. The goalpost keeps moving.
Like the dog with the sausage in front of him. Yeah.
That's right. So this time, I think we're actually going to see it, because the underlying economics, as I say, are starting to get strong enough that I think they feel confident they can do it.
Yeah, I saw it in the GDP report today. Only have 2 or so minutes left. I want to quickly talk about bank branches. What are you seeing there in terms of use of bank branches as people shift to digital banking?
Yeah, well, the number of transactions that are actually getting done through the banking branch system is way down. So I think in 2000 it was probably 95%, and it's, I think, down around 65%.
So big drop.
Today. Huge drop. People are going online, they're going to their smartphone, and so we're investing in those things to make sure we have very high quality and competitive offerings there. That does raise the question of what do you do with the branches at the end of the day. I think you still need that, and customers expect you to have that, but the layout of the branches in terms of all the space that's been dedicated historically to transaction processing with a big teller queue,
right.
You don't need that anymore. So I think what we're now trying to work through is how do we redesign and reshape the branch into something that's smaller, that probably has more private meeting space, where we can put product specialists in, and you can call ahead and make an appointment. And if you just have transactions, you can go into these super smart and sophisticated machines that can do almost anything that a teller used to be able to do.
Only about 30 seconds left. Do you think that means you'll probably shift downward your real estate portfolio in terms of branches, how much space you need?
I don't think it's fewer branches, but I do think it's less space at the end of the day. So I think there'll be some savings, but 70% of our branches are leased, and so we have to look at when those leases roll. So this is something that won't get done tomorrow. It'll get done over a 5 or 10 year time frame.
So branches without tellers. It's a brave new world of banking. All right, well, that's all the time we have this week. Bruce Van Saun, thank you so much for being here and taping before Thanksgiving, so happy Thanksgiving. And the same to all of you. I hope you had a good holiday weekend as you watch this. Be sure to tune in next week when we'll be talking about whiskey with the guys from Sons of Liberty. If you missed any of this episode, it's all on WPRI.com. See you back here next week.